We're always having fun here with Don Getling and Gino Franti on the National Real Estate Cafe, where you get your daily dose of real estate market updates.
And of course, in the middle of the week, yes, I won't say it, it's that day. And we're going to let you know what's going on with the economic calendar and things to come. And we've already seen some numbers coming out, haven't we,
Oh,
Gino?
it's been like a seesaw this week, up, down, up, down. So the market, when there's this much volatility, has a little bit of indecision, and they're looking for a sign.
That's right. So far, we've had some interesting numbers come out yesterday. Durable good numbers, boo. Housing numbers, yay. Consumer confidence, higher than it's been. Go figure. We have the Fed decision coming up later today. And I'll let you finish up with the GDP. That's your drum.
Yeah, I really think that this week, all this indecision, all this up and down, all this volatility, finally a little spotlight off of Europe. Okay, Europe looks like they're getting their act together. We kind of know the direction of Greece. We kind of know the direction of what's happening with their bond purchase program.
Now it's us?
I'm sorry?
Now it's us?
No, no, no. We just
Okay.
have to see GDP. We've had an amazing run on GDP, 3 quarters in a row. This last one of how we ended the year is going to be the market mover and the catalyst we're waiting for.
Well, especially if it follows up a questionable durable goods number. Consumer confidence is up at 102.9, one of the highest numbers we've seen in 8 years. That's right, 8 years. And all of you are feeling a little bit more confident, but durable good numbers was down 3.4%. And they're blaming that on the stronger dollar and on weaker oil prices. So how is that affecting us? Well, let's just say 5 months ago, if you were to buy $1,000 worth of goods, it cost euro 745 euro. Now it costs 900. That's a 21% increase in 5 years.
Wow. I mean, you mean 5 months, Don.
5 months, sorry.
In fact, so that's really like, talk about almost a 50% increase in the cost of American goods abroad for people purchasing with euros. That's going to have an impact on our production levels. I'm sorry, that is significant inflation outside the U.S. However, it does affect us here at home.
That's right. So how did this affect the stock market? Bam! You talk about bad durable good numbers and everybody worrying about the stronger dollar, potential inflation of our goods overseas. It hurt the stock market. So how did that affect the bond market, which is interest rates?
The bond market's actually been a little flat considering the news. It's kind of like struggling through this tug of war, right? As the news is good news, bad news, good news, bad news. There's still some indecision on the horizon, so rates remain really good. However, I'm looking for the catalyst again. GDP this Friday will be a market mover. It'll affect interest rates. And based on the technical patterns, it looks like it could actually make interest rates worse. So if you've been considering a refinance, lock yourself in right now. Take the gains. The upside is too small. The downside is too big. Don't risk it all on the farm.
That's right. So don't risk anything. Make sure you tune in daily to the National Real Estate Cafe with Don Gatling and Gino Franti to see what's brewing tomorrow. Housing numbers.